Good morning, everyone, and thanks, Adam, for that introduction. Accenture are proud to be a sponsor of the ABA conference this year and to be an associate member of the ABA, which has only occurred the last few years, like many other partners around the room. I'd also like to say we're delighted to have worked with the ABA and the industry on publishing a report which is on all of your tables, Bank on It, Customer Trends 2023, and that'll feature tomorrow morning with a session on that topic. So we're delighted today to be joined by the Honourable Dr. Jim Chalmers MP, the Commonwealth Treasurer, who'll deliver the opening address, and we're looking forward to hearing from him shortly. Dr. Chalmers has an extensive and esteemed political career. He earned his PhD in Political and International Relations from ANU and graduated with a first-class honours degree in Public Policy from Griffith University. Since 2013, Dr. Chalmers has been a member for Rankin, his hometown and electorate of southern Brisbane and Logan City. From 2016 to 2019, he served as Shadow Minister for Finance and then became the Shadow Treasurer for 3 years from 2019 to 2022. But perhaps some facts that are less well known about Dr. Chalmers. He's authored books on political issues and economics, such as Changing Jobs, The Fair Go in the New Machine Age, published in 2017, I think co-authored with Mike Quigley, and an earlier book released in 2013, Glory Days. Reflecting on the key issues covered in those books, one covering perspectives on the rapid rise in artificial intelligence, robotics and automation, and the potential impact on jobs, society and inequality. And the other providing an inside account on the global financial crisis, the lessons learnt, and capturing, the essence of what Australia needs to do in terms of confronting future economic challenges. It'd be hard to consider two more relevant and compelling topics of the day. I think we all recognise the enormity of the local and global challenges that have intensified during the Albanese government's first year in office and the enormous pressure that households are under. But in the Treasurer, we have the rare combination of someone with a sharp intellect, a command of the economic issues, both cyclical and structural in nature, but at the same time a person who's deeply grounded in the reality of what impact this has on Australian families and the issues that they discuss over the kitchen table every night. As an industry, we are all committed to and have an obligation to play our role in building a strong, stable and trusted banking system to support economic growth and, importantly, to advance the prosperity of all Australians. Looking ahead, there's no doubt 2023 is a time of transition, and it's likely to occur in multiple forms, whether that be economic, climate, customer behaviour and technology, and they'll all play a role in redefining the future of the industry. So without further ado, please join me in extending a warm welcome to the Treasurer, the Honourable Jim Chalmers.
Good morning, everybody. Can I begin by thanking Uncle Brendan for the opportunity he gave us this morning to reflect, and also for sharing culture with us and the amazing performance of the Yidaki as well. I wanted to also acknowledge the Gadigal people of the Eora Nation and express my thanks to everybody here who has already joined the journey towards a voice to Parliament, which is all about recognition and listening and making a tangible difference to First Nations communities. I want to thank Ian for the very kind introduction and also Accenture for sponsoring the gathering here today. And I wanted to thank Adam Spencer, of course, as well for guiding us through this morning. To Anna and to Peter, to all the representatives of our banking, finance and legal community, thanks for being here and for the opportunity to talk with you this morning. I am really grateful for the constructive, collaborative, positive dialogue that we have, and particularly with the Australian Banking Association. And here I did want to especially thank Anna for her leadership, but also for her engagement over a number of years now, during government, of course, but also well before that. And also for the opportunity she's given me to speak at this conference for the second time, but for the first time as Treasurer. Now, I'll have an opportunity later today to talk about the national accounts for March, which come out in a couple of hours' time, and also to talk about yesterday's interest rate decision as well. So what I wanted to do with you this morning is to focus almost exclusively on your sector and particularly to announce some changes to the payment system, part of our efforts to modernise payments and make that a central feature really of our efforts to make our economy more innovative, more productive, more competitive, as well as we seek to grow out of the current difficulties that we face in the economy. Now, when I was here last, just a couple of months before the election last year, I spoke about some of the challenges facing your sector then and the need to build resilience in the face of new developments like the rise of digital assets. It's fair to say that in the 14 months since then, the outlook for the global financial system has only grown more complicated. At the time of my last address, the upper limit of the Fed's target range for the funds rate was 0.25%, and today it's 5.25%. And everybody in this room knows that the scale and the speed of rate rises around the world has increased volatility in the global financial system. And this has contributed, for example, to the failure of SVB and what we saw with Credit Suisse, and that further tremors in the global environment are possible, if not likely. We aren't unaffected by this, as you know, but our financial system is well placed, well capitalised and well regulated, with capital requirements that put us in the top quartile of countries internationally, banks with strong liquidity coverages and world-class supervisory frameworks. APRA's played a big role in this under the leadership of John Lonsdale and Wayne Byers before him. I wanted to acknowledge them and also acknowledge Joe Longo, who was here. I spent some time with John last week comparing notes about the system, and he'd be the first to say that the strong position we find ourselves in is no reason for complacency. And if there's one word that characterises the approach of our regulators and your government, it's vigilance. Something that is very clear, I think, in the government's new Statement of Expectations for APRA, which I'm releasing today as well. The Statement of Expectations outlines how we expect APRA to regulate banking, super and insurance. And in this version, what you'll see is we're explicitly requiring our prudential regulator to factor risks related to climate into their work. And we're also asking APRA to make sure that when they apply their regulatory requirements, they're mindful of the relative size and business models of the different businesses represented here and elsewhere. Now, all of this will help to make sure we maintain a stable and robust financial system for you and for your customers, while also fostering competition and innovation in an evolving economic environment. Now, the strength and resilience of our financial system is one of the big things that we've got going for us in an uncertain global environment. But that doesn't mean that the system is perfect. Let's be blunt about that. Our regulatory frameworks and infrastructure haven't kept up with the big trends and transitions happening in finance. And I think that's especially the case when it comes to the digital economy and to payments more specifically. Our policies, our regulations, they predate the development of mobile payments. The infrastructure that a lot of businesses and governments use for functions like payroll, the bulk electronic clearing system, is clunky, it's inefficient, and it's cumbersome to maintain. And we haven't had a coherent, sensible strategy to phase out costly means of exchange like cheques, something that's already been achieved in other economies like ours. So our strategy, our agenda, is to address and resolve these issues, to remove the barriers that are inhibiting the development of a modern payment system. But our plan for payments is about a lot more than just triaging the problems that we face right now or playing catch up and patch up with the system. It's about setting us up for the future as well, recognising that the opportunities that exist at the intersection of the digital economy and payments and the sectors represented here represent a gateway towards the more efficient, competitive, productive and innovative economy that we want to build together. So let me take a few minutes to put today's announcements into this slightly broader context. Now, 4 weeks ago yesterday, we handed down the second budget of the Albanese government, a set of initiatives to deal with our immediate challenges while laying a foundation for future growth in our economy. Now, we found a way to do this in the context of some pretty significant headwinds. Inflation falling from its peak but expected to remain higher than we'd like for longer than we'd like. An economy due to slow substantially over the next year because of interest rate rises, another rate rise yesterday of course, but also because of difficult global conditions, as well as persistent structural pressures on our budget as well. And that's why we put such a premium in the budget on responsibility. And our efforts mean that we're expecting the first surplus in 15 years, then smaller deficits and less debt than forecast in the March budget last year. Now, just as important as all of that, though, is the strategy that we put in place for growth, to expand our productive capacity through investments in the energy transformation, skills, housing, small business, but also the vast opportunities of the digital economy. Digitisation and new developments in technology like AI have the potential to unleash a new wave of productivity improvements in our economy. And that's why our strategy is about embracing this shift in ways that contribute to strong, sustainable and inclusive economic growth. That stretches across government, and you saw that in the budget a few weeks ago, through initiatives to build trust in the adoption of AI, a set of policies to encourage small businesses to adopt and adapt to technology as well, all underpinned by big investments in developing our skills base so that the shift to digital works for and not against our people. But we recognise that all of this will be incomplete unless we get the policy and regulatory settings right in finance, and especially in payments. That's because payments are the tracks on which our economy runs, which means that improvements here make everything move more efficiently, reducing costs for households and businesses, freeing up resources that can be used to grow the economy, encouraging the trade of more goods and services, and fostering competition between payments providers that can lead to further innovation and better service offerings, something that we're already seeing the benefits of, with Australia taking to cashless and mobile payments faster than almost any other country. All this means that a more modern payment system also means more innovation, more productivity and more growth. And with the plan that we are releasing today, our policy settings will now reflect that opportunity. So our vision is to create a modern, world-class and efficient payment system that is safe, trusted and accessible and enables greater competition, innovation and productivity across our economy. And our 5-point strategic plan to realise this ambition is as follows. First, promoting a safe and resilient system by reducing scams, strengthening cybersecurity and updating the RBA's supervision frameworks. Second, making changes to the payments legislation, a new licensing framework, more competition and transparency across systems, more collaboration amongst regulators, plus steps to reduce small business transaction costs. Third, modernising payments infrastructure by phasing out cheques and supporting the industry's transition from the old clearing system to the new payments platform. Fourth, uplifting competition, innovation and productivity by aligning payments reform with other parts of our agenda for the digital economy, including the consumer data right, digital ID, skills and AI agendas. And fifth, leading in global payments, including through our work in the G20 and in the Pacific to improve the availability of fast, low-cost international transfers and piloting a central bank digital currency at the same time. And with the rest of my time here this morning, I wanted to just embroider these 5 things in a little more detail. So first, we're pursuing a range of initiatives to promote a safe and resilient payment system. This will build on the work that we've been doing with many of you when it comes to our National Anti-Scam Centre, with new industry codes for banking, telcos and digital platforms, updating our national cyber security strategy with the goal of becoming the most cyber secure nation by 2030, and the RBA will be adjusting its supervision of the payment system to account for new developments in technology, with some consultation due to start later this year. Second, we're going to update those regulatory frameworks, improve access to the payment system and take steps to reduce small business transaction costs. On the legislative front, we'll be making changes to the Payment System Regulation Act to make sure we've got the powers to respond to emerging challenges, and we'll be pursuing a new licensing framework as well, so that payments providers are treated consistently no matter the technology that they are using. And as you know, there's some complexity in all of this, so we will be consulting with you on the details and to make sure that the frameworks are implemented consistently. Treasury will be leading work here to improve coordination amongst our regulators, with a particular focus on making sure that new entrants have clear, transparent direction on what they need to do to access the system. These reforms will make sure that payments providers know their obligations and also their rights, and will support the rollout of least cost routing across the economy as well, lowering the costs of doing business if you're a small business. The Reserve Bank has already made it clear that it expects full implementation of least cost routing by 2024, and if we need to intervene to ensure that, we will do that. Now, to maximise the benefits of this modern regulatory framework, we want to work with you on the transition away from cheques and away from BECS. And these are the main parts of the third part of our plan. We know that the usage of cheques has been declining, with a 90% decline in volumes of cheques over the past decade alone. And this is largely because digital transactions are easier, cheaper and more accessible. In fact, currently 98% of retail cheques could be serviced through internet or mobile banking, and 100% of those used in institutional and commercial settings. So all of this means that leaving cheques in the system is an increasingly costly way of servicing a tiny and declining fraction of payments. That's why we want to systematically transition these transactions to digital, to improve the efficiency of this sector and getting Australians their money faster as well. So today we're signalling our intention to wind down the cheque system by no later than 2030, leading the way by moving Commonwealth Government departments to new forms of payments by 2028. Now, this transaction will be gradual, coordinated, inclusive and respectful. Public consultation with the whole community will take place before the end of the year, including with the states and territories. And we will work with you to make sure that every Australian gets the assistance that they need to make this important change to other forms of payment in good time. The second piece of legacy infrastructure we're focused on replacing is the bulk electronic clearing system. And consultation on BECS, as you know, is currently being led by AusPayNet. And we will partner with you to make sure that following this, the transaction to the MPP is as streamlined and as inclusive as possible so that we don't leave people in the lurch. So I've already explained how payments fits into our broader growth strategy, and we're confident that further innovation and productivity gains will be unlocked at the intersection between faster payments, AI and a growing digital skills base. But there are also some other specific things that we're going to partner with you on to uplift productivity, innovation and competition across the economy, which is the fourth part of our plan. For example, Katie Gallagher is getting to work on improving and expanding digital ID so that you can approve financing for your customers faster. And today, Stephen Jones is announcing our plan for the consumer data right as well. And our goal here is to support take-up and to deepen CDR's place in the sectors where it's already operating, working with you and other impacted industries to make sure that it can fulfil its promise of promoting competition that's in the best interests of consumers before we expand it to other areas. Now, all of this work will inform the fifth part of our plan, which is to take a leadership role in global payments, something we'll achieve by enabling smoother international transactions as well through the NPP, We'll host an industry roundtable to understand where we can build international competitiveness here. We'll work with the RBA on a central bank digital currency pilot, and we'll pursue all of this through the context of a dedicated effort through the G20 to make more progress, with a particular focus on what we can do to enable more efficient, low-cost transfers between Australia and the Pacific. So the last time I spoke to this forum, I ended by outlining 3 goals for the financial system: the creation of a fit-for-purpose regulatory framework, maintaining strong, resilient banks with more innovation and competition across the sector. And in our first year in government, we've acted and advanced on all 3. Through Stephen's work on buy now, pay later, superannuation and financial advice, our efforts to strengthen the competition framework and infrastructure underpinning our capital markets, and now a strategic plan for payments as well. In the next 12 months, we'll introduce legislation to update the Payment System Regulation Act. We'll make further progress on the new licensing regime, and we'll partner with you on a transition plan for those legacy systems I've been talking about. But beyond payments, we'll also be consulting on a licensing and custody framework for crypto assets. We'll progress together mandatory climate risk disclosure, and we'll be undertaking new consultation with you on a comprehensive sustainable finance strategy as well. All this and the breadth of what you're doing with your sector reflects an understanding, I think, that our efforts to grow the economy rely heavily on our ability to realise this vision we've talked about today for a modern, world-class and efficient payment system, safe, trusted and accessible, which enables greater competition, innovation and productivity right across our economy as part of a more future-focused banking sector. And that's why I look forward to the conversation with Anna in a moment, and why I value the opportunity to speak with you today. We've got a lot that we can work on together, payments and more broadly as well. I'm grateful for the opportunity to talk with you. I'm grateful for the opportunity to work with you, and we've got a big agenda, and I look forward to discussing it with you in more detail over the coming months and years. Thanks very much.